Another dire economic prediction. Let's have a look. Good evening, everyone. Florian here, and welcome to another episode of HeiseSays. Grab your hashtag recession-proof instant coffee, and let's look at an article which is warning us of structural decline and, well, a productivity crisis that Australia is facing. This feels like a broken record, and we've heard it all many times before. But this time it's from, well, the CBA, essentially the heart of our economy in some regard. So, the CBA warns of a productivity crisis will crush Aussie wages and living standards. Commonwealth Bank has issued a dire prediction about what lies ahead for Australian workers and the economy in coming years. CBA has issued another sobering warning to Aussies, predicting the economy's low growth will lead to lagging wages and living standards. Well, I'd argue that's already happened. We're already seeing that. Australia's potential growth has trended downward for several decades, wrote the World Bank economist Harry Otley in a note to investors on Thursday, and the culprit is lower productivity growth. The report pegged Australia's potential growth rate at which an economy can grow over the long term without causing inflation to rise at 2.1%. Okay, well, look at that. Look at that decline in our potential growth from the 80s, just crashing down. Look at it from 2000, everyone. Look at it from the 80s to 2000, not that much, but look at 2000 to now. And I wonder what's causing that. If we look at our GDP growth rate per capita, since the GFC, it's been below trend. So there you go. Things are getting better, but they're getting better by less per person. Just think of it like that. So if you feel like your life isn't as good as previous generations, you know, the amount of quality of life you get for the money that you spend, let me know in the comments, guys. Potential growth has been in structural decline due to weaker productivity growth, Mr. Otley said. Looking ahead, it is difficult to see potential GDP growth lifting materially in the near term. There is a risk potential growth is lower than we estimate given this signal from recent inflation data. I would argue that, well, if you just look at the struggle, and here in Australia we've got a significant problem. Our economic complexity is declining year over year. It's created. We've got an embarrassing level of economic complexity because, well, we are a colony on the edge of the world that ships everything overseas. Now, I know there's calls for manufacturing and production here in Australia, but why would you go through the hassle of trying to start something up? I would say Australia is the lucky country for big corpos. The unions, the banks, government employees. Not for anyone who wants to start a business or build something. You know, tall poppy syndrome will just destroy the innovators. And it's just the cost, the overhead, and the fact that even our energy is getting more and more expensive. And finally, why bother risking and working hard when you can just buy into real estate? The Australian way, eh? Low productivity growth is due in large part due to the expansion of the non-market sector, including public servant jobs and NDIS spending. Well, I mean, we're all aware of how large the public sector is. But NDIS, one of the consequences of this, the funding in NDIS, is that you're losing skilled people from other industries that are leaving, like a lot of nurses, are leaving to do NDIS jobs because it's better pay and less stress and easier. So the mining sector has also experienced falling productivity. Mr. Otley warned if potential growth remained low, it would lead to a slower growth in economic activity, living standards, and real wages. Well, AI and an orderly net zero transition could be offset to low productivity. But this would require businesses to be agile and adaptive as technology improves, something Australian businesses have historically struggled with. Why invest in your business when you can put it in real estate and it's pretty much government backed? Really, why? I mean, how many of you have got your own businesses and you've got investments, and just compare the return you've made on your investments, if it's in property, as the example I'm giving, and compare the level of stress there to the stress that you have in running a business and the challenges that you have in running a business. Have you seen those signs everywhere? Those signs that are going up on all the shops, we don't tolerate inappropriate behavior to our staff. You go through a drive-through, you go through to 7-Eleven, you see these type of things everywhere. And I was thinking, is this to do with just the culture shift here in Australia? We're becoming ruder, more aggressive people to the poor retail workers. And, well, no, it's not. It's because there's legislative changes now. There's more responsibility put onto business owners because, well, they are responsible to ensure that there isn't a hostile work environment for their staff. That could be from bullying or inappropriate behavior, but also potentially from customers. So there you go. That's why these things aren't. And I understand that's a good objective, but it is another burden on running a business. These all add up over time, and they disincentivize our investment into these sectors. So arguably, Australia is likely to see both less and a delayed increase to productivity stemming from AI. We'll have to see if this algorithmically generated content can help productivity. For the net zero transition, Mr. Otley said productivity benefits were likely only possible over the medium to long term, and the current phase of the transition was challenging. What productivity benefits? How are we going to get productivity benefits from increased energy costs and a grid that's less reliable? Can someone explain that to me? Higher energy costs are a negative for competitiveness, productivity, and growth. Yes, yeah, they are. It's just going to get more and more expensive. We're doing this to ourselves. We're self-flagellating as a nation to alleviate some of the guilt and fear people are feeling, and it won't make any difference at all in a global context. I would argue it would be smarter to maintain competitiveness on a global scale and look at R&D development. Or if we want to go net zero, let's go something that's going to ensure that we have adequate base loads without having to build significant extra infrastructure and transmission capacity. But that's talking too much sense, isn't it? The report came after CPA's own share price had tumbled 9% this week after its September quarter trading update on Tuesday presented steady but unspectacular numbers. The bank is now down almost 18% since its all-time high in June. It had risen 85% in the prior 2 years. Most brokers now view CBA as overvalued and hemmed in by limited future earnings growth. Yeah, I mean, our banks are just crazy with what they're earning here. We are a nation of, we're a bunch of banks with a nation. So a new economic era. Thursday's missive came after the bank's chief economist, Luke Yeaman, also warned that higher interest rates, market volatility, and geopolitical tensions are all on the horizon as trust breaks down between countries. We are entering a new economic era, one rules that are very different from the last, Mr. Yeaman wrote in a dreary note to investors last month. He maintained the world was in the grip. I can't read tonight. What's going on? He maintained the world was in the grip of a deep structural change, not a temporary Trump phenomenon, as some would like to think. The current frictions between the US and China were a case in point. China and the US aren't negotiating a typical trade deal. They are flexing their economic and strategic muscle as part of a contest for long-term supremacy. Most investors and business leaders had cut their teeth in the last economic era, a period of globalization stretching from the mid-80s to the GFC, and characterized by stability, trust between countries, and capital flows across borders. However, now globalization has stalled. A massive defense uplift is underway, and there is a rapid and costly push to rebuild sovereign manufacturing capabilities in advanced countries. He described a multipolar world order, with the two largest countries in the world in open strategic competition. Assumptions that China would continue pursuing economic reform as it became more integrated in the global economy proved naive. Instead, China has adopted a more assertive posture, seeking to dominate strategic sectors using economic coercion to achieve its political aims and openly fostering closer ties with Russia, Iran, and North Korea. That geopolitical shift would be compounded by three other factors, he warned: the race to net zero emissions, the AI boom, and declining populations. Let's have a chat about this one, guys. Well, I mean, this is going to... it's interesting. I mean, I don't think there's anything new here. I think everything they're saying is already happening in Australia. Compared to, from a global perspective, we're just not as productive. We're not as competitive. Any manufacturing we produce here, we're not going to have the same scale as other parts of the world. So there's always going to be a cost difference and a transportation cost. It's only viable if you sell to the local market. But then, when everyone goes to Bunnings or whatever other shop, what do they buy? They buy the cheapest stuff because cost of living is forcing them to do that because they need to save every penny they can to get into their house. And where's the incentive for businesses to invest or people even to start businesses? Just get into real estate. Isn't that what everyone does here in Australia? Let me know your thoughts on this one, guys. As always, I'll see you next time. Bye for now.